Richard, good to have you with us. Thanks for joining us today. So let's take a look at this rating. Of course, it is in line with the country's sovereign credit rating that you have from Fitch's perspective. But just talk to us about, the significance of this debut Eurobond for Zambia.
Yeah, not many countries in Africa have issued Eurobonds like this. Ghana sort of blazed the trail back in 2007. I think the interesting thing for Zambia will be you've got a new government there which is sort of feeling its way on the policy front. It'll be very interesting to see how they're going to use the proceeds. Infrastructure is one of the big shortfalls which has been identified in the region, so we're obviously hoping that that's where most of this will go, but Ghana had those same sorts of ambitions and actually frittered a lot of it away on higher wages. So as I say, you have got a new government in Zambia. We did have some concerns earlier in the year about some of the policy statements they came out with, but so yeah, we'll be watching with keen interest how they use this money.
Yeah. Just in terms of the appetite for the $500 million bond, as I said, strong subscription coming through?
I'm not, we wouldn't be aware of the details of this, but, there is a lot of interest in sub-Saharan Africa from an investor point of view. It's still very much a niche market, but it's obviously regarded as a diversification out of, into strong growing countries. Zambia's growth rate this year, is probably going to be above 7%. It might be weakening a little bit. But it's definitely a dynamic story as long as the policy framework there remains, as it has done for several years now, quite positive.
Now, the country has an outlook which was revised to negative. That was during March this year, and you're concerned around growth in China and the impact that that's going to have on demand for copper exports. And then, of course, you also cited concerns around the political situation, which appears to be stable right now, and also sustainability of government finances. So to just walk us through some of those risks and what it means for the credit rating going forward.
Yeah, the reason for the negative outlook was mainly some of the early policy announcements that the new government came up with. As I say, I think the government was feeling its way a little bit, and it may have been thinking aloud to some extent. So I think we do. They've reversed some privatisation deals. They started talking about windfall taxes on the mining sector. Wage increases, things like that, which, if they were all implemented, it wouldn't be a positive development. But we're sort of waiting and seeing how things develop. We'll be visiting again towards the end of the year, and we'll take a more considered view of how things look at that point.
You've also, cited the fact at the beginning of the interview that Ghana and Kenya also have a similar rating in terms of that B+ rating for their Euro bonds. So what is your view of the relative attractiveness of Zambia versus peers like Ghana and Kenya right now?
At any rating level, you can have different pluses and minuses. The advantage that Zambia has is that it does have a steady source of income from a commodity, copper obviously in this case, and it's got a very good policy track record and a history of political stability. If you look at Ghana, its main negative is its predilection for overspending in election years, and this is an election year, and we're seeing the budget blow out, so that's a negative for Ghana at the moment. And Kenya, clearly we've had major political instability in the past around election time, and again there's elections coming up early next year. So from that point of view, Zambia is looking reasonably solid.
Richard, thank you so much for joining us today. Richard Fox, Senior Director at Fitch Ratings.